Well, we had Spring Bank, one of the rescued banks in Nigeria, out with results earlier this week, showing a 630 million naira profit in the first quarter of 2010 after a 24.2 billion naira loss in the 8 months to December 2009. Joining us now from Nigeria is Lanre Odunlami. He's the CFO of Spring Bank. Lanre, thank you very much for your time today. As I said, Spring Bank being one of the rescued banks in Nigeria. In fact, we saw a 50 billion naira capitalization for the bank late last year. And we also know that the Central Bank of Nigeria dubbed Spring Bank as being in a grave situation last year. As I mentioned, we are seeing a profit for the first quarter of 2010. What contributed to the positive set of numbers?
Well, good morning. Thank you. At pre-intervention, we knew exactly what happened last year. The downturn in the economy last year actually caused a lot of problems, and CBN had to intervene in September last year. What we have done basically to improve the result in Q1 of this year is to set up a strategy, which is what the new management was doing, try to get all the components together, do a cost optimization. So what we have done basically is on 3 components. We developed a very active trading desk in terms of treasury trading, trading in bonds and T-bills. As you know, we can't do a lot of lending at this period. What we're trying to do is to be conservative, but at the same time, we tend to be profitable. Our bonds trading has been very, very active, and we've equally done a lot in terms of interbank. Basically, the other part is loan restructuring, and then cost optimization. And I think to date, what we have done is that on a monthly basis, we've been able to reduce costs to about 200 billion on a monthly basis, and I think we've done close to over 1 billion in that first 1 quarter. So all these have contributed to the improved earnings in Q1.
Lanre, you're talking about being quite active in the bond market and T-bills as well. Give us some more detail about that and how much exactly you've invested in this part of the market.
Well, I think from our investment portfolio, we've done close to about 50 billion to 60 billion in that market. Majority of that money coming from the CBN Intervention Fund, because that money we felt should not be available for lending. What we have done so far in terms of the contribution to income and gross earnings should be about 60% from that market. What we basically do is to buy these bills. Apart from the interest income we earn from it, we equally trade them for income. I think that has contributed significantly to about 60% of our gross earnings in that period.
And are you mitigating your risks adequately with regards to being involved in this type of asset class, which is obviously viewed as far safer than being in the likes of the equity market?
What we have done is to trade more in the federal government of Nigeria bills. And the treasury bills of Nigeria. We are not doing so much in terms of other companies' equity and bonds, and even state government bonds. So the risk has been well dimensioned. We created a framework. We have a narrow market that we are dealing with, and once the framework is good and we are working within that framework, I think the risk will be largely mitigated.
Of course, since the rescue of Spring Bank, we have seen a lot of changes at the top level as well, which is obviously contributing to the change in strategy going forward. But tell us a little bit more about this 50 billion naira bailout. Are you going to be paying back that money anytime soon? What is your plan going forward?
Our plan is to pay that money as soon as possible. What we have done initially is to take that as a lifeline, try and invest, try to nurture up our deposit base. While we have that fund, we equally recognize the fact that we need to improve earnings, improve our deposit base, because that's basically the trading platform. Once we have been able to do that up to a certain extent, and then we've created some level of liquidity. As I speak with you, our liquidity ratio is about 50%, which is twice the regulatory minimum. And we feel that in a short while, if we are comfortable at certain levels, we should be able to pay that intervention fund.
All right, looking at the fact that Spring Bank was created from the merger of 5 banks in 2005, it seems that not very much is known about your company. Tell us about your customer base and what kind of market share you have at this point in time, and also perhaps shed some light in terms of your geographical reach.
Okay, Spring Bank was actually a merger of about 6 banks in 2005, and in terms of customer base, we have about 1.3 million customers. Branches about 169 plus about 40 cash offices. That's about 200 outlets in terms of branch network. What we have in terms of focus is retail. Basically, we're essentially a retail bank, and in terms of our geographical spread, we see about 99 in terms of Lagos and West region. In the north, we have about 27 branches, and in the southeast and south side, we have about 47 branches. So in terms of distribution, we are cut across all the country, and our basic focus is basically retail businesses. That's not to say we don't do some corporate businesses.
Okay, so your focus is retail businesses. Give us some indication in terms of what the deposits look like at this point in time. We know that they increased about 11% in the first quarter to 158 billion naira. You're saying you're focusing more on the retail side of things as opposed to the corporates.
Well, as I said before, I think our immediate target after the intervention was to shore up our deposit base. We recognize the fact that we needed liquidity at that time, especially because CBN rescued us with 50 billion, and our target was to pay back that money as soon as possible. So what we've done is to create a framework for deposit mobilization, and I think all the staff of the workforce about understand the fact that we needed to shore up our deposit, and we've set up a performance framework that is reward-based, and that has really helped us over a period of time.
Okay, you mentioned loan restructuring, and of course this was your new strategy going forward. Tell us about the non-performing loans and the provisions that you've made.
Well, we have quite a large portfolio of non-performing loans, and I think in terms of provisioning, we have close to about 100% provision on them. Our basic challenge now is to recover all those loans, and we are doing that. We have a strategy for recoveries. We've done quite a lot in terms of recoveries. In this first quarter alone, we've done about 2 billion. Most of the loans are dated legacy loans, and they are very, very difficult to recover, but we are doing our best. And I think we believe by the second half of the year, we'll reach our milestone in terms of recovery.
Which clients were problematic with regards to the non-performing loans and, of course, the problem loans?
Well, the clients that have been problematic were the old legacy bank loans, which are loans that are dated like 10 years, 7 years, 8 years back. It's been difficult dealing with those customers because if you look at the components of the loan itself, it's like the interest capitalization form about 90% of it. So customers are always very resistant.
Which
to
customers
the fact that
are you referring to here, Lanre?
The customers across board, various strata, could be energy customers, could be telecoms, could be small scale businesses. But what I'm saying in effect is that the major problematic ones were those that were granted years back, and it's been very difficult because some of them, if you talk to them, you have a situation whereby the major components of their loans are actually interest capitalization. Some of them are paid down the principal, and they find it difficult to comprehend why they should pay more. So it's been difficult handling this kind of customers.
In terms of your biggest shareholder, 54% owned by PHB, and of course we know that PHB was also one of the rescued banks and was also dubbed as a bank that was in a grave situation late last year. Give us an indication in terms of what your strategy is going forward, and of course there is a lot of talk about various parties being interested in Springbank as an acquisition. Do you think that is likely, given that PHB wanted full control of the bank?
Well, I think that's already a matter under litigation, and I won't want to comment extensively on that. But one thing that is very important at this time is that we've been engaging the shareholders, and I think they agreed on one point that the bank needs to survive. The critical thing for them is that there's a new management. The management is focused. The management has turned the bank to profitability, and we intend to sustain that profitability. I think our responsibility to all the shareholders is to deliver shareholder value, and I think they all agree on that point, and it's a good point for us to start with. We have a recapitalization plan that's going to span up to the end of September. Engagement of shareholders to see how we can resolve all these issues is a very core part of it, and we believe that before that time we would have sorted out all these issues.
All right, give us your strategy with regards to recapitalization. We know that your share price has taken a massive knock. What is the attractive element of Springbank as it stands right now? Because there should be a plan in place to boost shareholders' funds from minus 93 billion naira to at least around 25 billion naira.
Well, we have a very good plan in place. Well, we have a combination of things we are doing. There are so many things we are doing. We have a financial advisor that's advising us, Recapitalization Bank. We are working together. We are talking to the shareholders. And AMCON is already in the works. We expect that in addition to the recoveries we are going to make to show up our deficiency, we also expect AMCON to buy some of our assets. If they do that, we have some level of liquidity that will bring it to the bank, and that we expect that should reduce the level of our of our shareholder deficiency, and then we sought for a new investor to come in. Now, as I speak with you, we have quite a number of interests, and we are working with them to see how we can deliver this capitalization plan by September.
Lanre,